Good morning. Uh, Welcome to Mornings with Dave and Phillip as we talk about economic issues this morning. I'm glad you're here. I look forward to your comments back. Hold on, Dave will be with us momentarily.
7 Light FM. Yes, that's see you there. Hey, good morning. It's 19 here before 9, 8:41. Time check it on your money. Find out how your IRA and 401k are doing this morning. Let's go downtown, find out how they are doing. The offices of Statler Financial Services, Phillip Statler standing by. Good morning, Phillip.
Good morning. How are you doing today?
Not half bad. I've been whining all morning about the fact that my sinuses are still clogged up. Beyond that, everything looks good. I'm seeing sunshine. May go outside and see if I can't get some heat before the rain comes today.
I did catch the news today because yesterday's rain kind of caught me unexpectedly. I had missed the news yesterday, didn't realize it was coming.
Well, we could schedule this perfectly, though. I mean, ask for it. Middle of the week, get the rain over with. The weekend's going to be absolutely gorgeous. While I don't like walking around in the rain, if I have to schedule it, I'll take it this way. And we got one more day of it today, and then it's nice, bright, and sunny for tomorrow. So we'll take that happily.
Yes, and it's going to warm up, be hot and muggy again.
I'll live without the muggy, but I could use some heat. Clear out my schnoz a little bit. Economic news starting out the morning. A company called Case-Shiller puts out a home price index. And yeah, the price of your home went up by a little bit last month, just not as much as they wanted it to. And now they're saying that 4.2% average price rise on the value of a home in this country is the lowest since way back in 2014 while we were busy recovering from the recession. That's not good news for the home market, is it?
No, it's not. And let's face it, Dave, that's an area we've seen consistent slowing. We've seen little bits and pieces of just little things saying, hey, this number's down a little bit, that number's down a little bit. So it's not really surprising, given mortgage rates have gone up a little bit. Home prices got to come down a little bit so that the price that people pay in terms of monthly mortgage payment stays about the same.
And it kind of gets down to the point where those data points add up into a trend, but they're telling us pretty much what you and I have been kind of suspecting now. We're still growing as an economy. We're not unhealthy, but we certainly aren't going to do 4% growth rate when the GDP comes out tomorrow, is it?
No, we're really not. And I finally looked at the advanced number, what the consensus estimate was on the advanced number for GDP, and it's 2.4%. So even if it comes in at that number, that is really not where we had hoped to be at the end of the year.
Not what the administration has been touting by any measure, and you can pretty well bet dollars to donuts that the president is going to be blaming it all on the Fed or somebody anyway in about 48 hours, right?
Well, yeah, that and the Democrats, because we couldn't get the government back open. I got to think that had a role to play because people couldn't spend the money. I mean, that's a lot of people that weren't working that had to conserve their cash and not go out and spend.
Oh, yeah, you take 800,000 people without a deposit in their checkbook, that's going to make an impact on the economy, isn't it?
Yeah, it definitely is.
Absolutely. The other thing is you did have one bit of bright spot, though. You said the mortgage applications actually went up last month. That was a tidbit I missed while I was going through the news.
Yeah, it is. Last week's mortgage applications increased by 5.6%, which was a little bit above where it was last year this time, but it was a big bump from where it was the last couple of weeks when you and I talked because it's been kind of down pretty low. So that's a good sign when it comes to housing.
On the other side of the fence, you and I have to say, data point, data point, data point. That's kind of the outlier among the trend indicators that we're getting out of the housing market, isn't it?
Yeah, right now that's definitely an outlier. But it could be a precursor too, right?
I will take that happily as well. Earnings season continues. We had kind of a slow day yesterday with a negative tinge, but still a relatively flat market. There's some good news coming out this morning from a couple of companies. Among the big ones, as far as beats are concerned, boy, did Best Buy's kick butt in the fourth quarter, didn't they?
Yeah, Best Buy really had a good quarter. They beat by 15 cents a share when it came to their earnings. Their revenue was above forecast. Their same-store sales were up 3%, and that's 1% better than was expected. They gave some full upbeat guidance for their full year, and they increased their dividend by 5 cents for the quarter. The other thing I saw in reading the report was that they attribute a lot of it to wearables. You know, iWatches, Fitbits, all those type of things that people are now wearing has created great demand, and that's helped them substantially this last quarter. They're trading up over 11.5% this morning.
I was going to say they're at the top of my big winners list. I get kind of a selective list each day, but I noticed that Best Buy was right at the top of the list. While we're talking about winners, and I always like to hear good news, and I know we've got some misses, Campbell's Soup also did just fine, didn't they?
Yeah, they really did. They came in 7 cents above estimates, which is about 10% better than expected. The revenue also came in well above forecast, but they did report they had some flat organic sales, but they saw their margins increase, which that's always a good sign when you can increase your margins. So some good things happening there. I'm sure it's cold in winter season, right? So soups, people are going to be eating soups. So they're trading up a little over 4% this morning.
Okay, so we're buying Fitbits and chicken soup. I'll bet you there's something we're probably not buying as much of on the reports this morning too, right?
Well, there is. We're not evidently trying to lose weight this year like we have in the past. Weight Watchers missed by 14 cents a share, which was pretty big for them. A matter of fact, their number came out after the market yesterday closed, and they actually halted after hours trading on their stock because it was dropping so fast.
Whoa.
Yeah, they've had a really. Go ahead.
I said that doesn't happen very often. They even have to halt trading, do they?
Yeah, and especially after hours. So, but they missed all across the board. Revenue missed, earnings missed. They have a weaker than they expected for 2019 revenue guidance, and their 2019 is off to a really slow start compared to the year before. They're trading down almost 36% this morning.
Ouch, that hurt. You know, the Oprah effect, everybody was all excited when Oprah bought into Weight Watchers and started making so much noise about it. Everybody figured they were going to be king stuff in the diet business. There's a limited effect to a celebrity endorsing a company, and it does wear off after a while, evidently.
Yeah, it really does. Now, I find this interesting. I'm looking at the chart right now. Their 52-week range has been $27.10 up to $105.73. So a big range, but they're fixing to open up at below $19 a share.
Wow. Now, I'm watching all of the ads and all of the features that I'm seeing. I haven't seen a lot of Weight Watchers advertising on TV. Nutrisystem's been advertising the crud out of themselves on the programs that Gladys watches. But it's interesting. Weight Watchers kind of pulled back a little bit. They're almost like the Rust Belt of the diet industry these days, aren't they?
Yeah, I think so. I guess they just don't have much to push. I don't know what their deal is, but because I remember last year they were a hot commodity last year.
Yeah, that's the real surprise. I mean, that's like a 180-degree turnaround for that company. It's kind of a surprise watching it happen.
Yeah. Hey, another big loser we had was Dean Foods, and I guess I didn't really realize this, but they are the largest milk producer in the United States, and yeah, so they came in with a 50-cent per share loss, and that's about almost twice what was expected. They were expected to come in with a loss of about 26 cents a share. So a huge miss there. Their revenue, though, exceeded the forecast, but they've had some significant increases in their costs, and so that's hurt them. They're exploring some alternatives, but they're trading down a little over 14% this morning.
Ouch, we've got some big swings to talk about. Other indications as to how our money's going.
Well, I think the other one we need to talk about a little bit, because we talked about Home Depot yesterday, is Lowe's.
Yeah.
Lowe's came out and they beat on earnings per share. They missed on revenue and they missed on same store sales, but they gave a positive outlook for the spring. And so they're talking about the reason that their quarter was so bad was Canada. The home building in Canada slowed down, and that was affecting them because they're trading up today almost 5%.
Yeah, I was going to say they're on my good winners list today in the process. That's the first time I've heard anybody blame Canada for a problem with a stock.
Exactly.
Well, everybody needs a scapegoat, and a new one needs to come up every once in a while. Setting the
Exactly.
table for the morning yesterday, like I said, it was a pink-tinged flat day. Dow was off by 0.13%, down $34. Nasdaq off by a little over 5, and the S&P was down by 0.08%, down 2.25. Not a really big moving day. I'm assuming we're probably kind of sitting on pins and needles, waiting for the gross domestic product report for tomorrow and seeing what the Sam Hill's going to go on over in Vietnam and in Congress today. There's a lot of non-financial stuff happening as well. 45 minutes before we open, Philip, what are we looking at this morning?
Well, you're right. There's definitely a pink tinge. But before I go to that, I just want to, this bulletin just came across my screen. The U.S. goods trade deficit balloons nearly 13% in the month of December. So I thought maybe that was worth noting before we talk about where we're going today anyway. It looks like we are heading red. Not by much. The Dow's down about $40. The S&P 500 is down just a little less than $5, and the Nasdaq's down 15.5. And gold and silver both trading down. Gold less than 0.1%, silver about 1/4 point, and then crude oil, man, it has made another switch up, Dave. If you couldn't tell by the gas prices, it went up about 25 cents. Um, they've got crude oil at $56.67 a barrel, up 2%. We're heading back towards 57.
Yeah, we need to bring Trump home and have him jawbone the OPEC countries again, don't we?
Well, we need to do something because that's my daughter asked me this morning, she said, man, what's causing gas to go up so much? Oil prices, man, oil prices.
Yeah, absolutely. Yeah, the Venezuela situation is getting just a little bit greasier with the standoff at the border going on, even for humanitarian goods. World markets overseas. Asia was mixed at the close. Europe generally trading down over the usual confusion in England as to what on earth they're going to do with Brexit. Yesterday, Theresa May said, well, we might just put the whole dang thing off, and the other party's saying, let's hold a revote, and it's looking like a dumpster fire over there by the time they're done. Phillip, somebody want to figure out how to make it a retirement decision that's right for your age and your station in life. Time to get a hold of some solid advice. How do I find you on the phone?
David, give us a call at 382-0037. Follow us online at our website, statlerfinancial.com. Follow us every day on Facebook where we repost what we talk about every morning. Statler Financial Services on Facebook. Like us there, you'll get copies of this right to you. And then every weekend, join us for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m. and now streaming on their website. So excited about that, Dave.
Absolutely. NewsTalk730am.com, streaming absolutely everything we do on that station. Phillip, thank you so much. We will catch you shortly, all right?
All right, sounds good, Dave. I'll be out. I will see you on Monday, buddy. Take care. Have a great weekend.
I have to explain the gross domestic product.
Thanks for joining us today. I hope you enjoyed Dave and I's conversation about the economy and earnings reports. Like I said, I will be out the next couple days, but join us back on Monday where we'll have another broadcast. Take care. Hey, if you need to talk to us, click the button above and schedule a time. We'd love to have a conversation about your retirement planning. Take care. We'll see you later.